Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is January 10th, 2018, and today is Wednesday morning. So looking at the economic events of the day, we've got two events coming up, one at 11:30 South Africa time. That's a UK manufacturing production number. We'll take a look at the GBP in just a moment. And then we have in the afternoon weekly oil inventories numbers coming out from the United States at 5:30. Okay, that's an important number, and we'll take a look at oil. But let's see what's been happening in the euro before we start. So we've continued our slide here with the Euro USD below this 119.54 level. Nice support level that we've broken, and we're just a bit below it, 119.36. So at this stage, I think we're just going to be a little bit choppy here, finding a new trading range after we hit this double top. Okay, I don't think that we'll be, breaking out and going back to 120.70-ish level, but we'll be making, somewhat of a new trading range, I think, between this, 120 ish level, okay, on the high side, and maybe 119.10-ish on the low side as a possible trading range for the Euro USD. A little bit of a lackluster performance in terms of its continuity, in terms of its trending upwards, and we just broke down. So, not much to really, say for today, but you might want to look for a bounce here and a continuation here as we've consolidated lower at this level. GBP USD not selling off as much, okay? So it's just telling us that the GBP USD is factored in, Brexit is factored in, no big surprises. So I don't think the number today is going to make that much of a difference in terms of which direction we're going to go. I think we're flatlining here. So I would take I would put the GBP USD maybe in the back burner as it's, less volatile than some of the other trades that we're looking at. Looking at the USDZAR, I don't want to give this up because a lot of people are, taking some positions on the long side, and we may see a bounce here. Okay, so, just realize that, we've deflated against the dollar, or the dollar has been deflated against the rand rather, tremendously, and we may have this correctional move, and everybody's betting on this correctional move. So it's the right play. Okay, just give it a certain time level. All right, don't let it get out of hand in terms of collecting this trade and letting it sit on the shelf too long, because there are other opportunities. Looking at gold, we slid a little bit yesterday from 118 to 1318 to 1310. As you can see here, we've slid just a little bit, and at this stage, the question is are we going to continue sliding here? Generally going into February months, we're bullish with the gold, so you have to weigh that in to see if we're just going to find ourselves trading with a new range. So the upper range, of course, 1325, lower range is 1293, and we're smack in the middle of that. So no big opportunities right now, but just consider that you're trading in a new range, and once it does slide down to 1293 or comes closer to maybe the 1300, it could be a good place to actually pick it up. Looking at oil, okay, oil trading at 63.46, finally breaking this upper level, and we spoke about this last week, and we said this is getting stronger, and I said this looks like it's going to break out, and sure enough, proof is in the pudding, and we did break out. Okay, we're trading at 63.46. Now, this is all-time multi 3-year highs, okay, and which that means is that at this range we could really close in $70-$75 a barrel. Okay, so keep this in mind as this unfolds, especially later today that we're having this weekly oil inventories number coming out. That's an important number just to keep out, and if you were in it and you listen to our daily reviews, congratulations to you. I'm happy to hear that. Dow Jones trading at 25,368 currently. Hit all-time highs yesterday again. I don't need to say it. Just buy the pullbacks. I said it on Monday. I said it on Tuesday. I said it last month. I said it the month before, and I said it the month before. So anybody who's not making money in this is really negligible. It's there. It's free, and it's producing so many opportunities to jump into the markets. Okay, every time it looks a little bit scary, every time it pulls back, and you say, oh, it's going to sell off now. Sure enough, it makes new highs. Okay, and there's continuity in the market. There's consistency. There's follow through. And if they're buying it, like I said, at 25, they're not betting that it's going to go to 25,100. They're betting that it's going to go to 26,000. Okay, we're jumping from our relative performance in terms of what our expectations are. So we're in a completely new level right now where for the Dow Jones to go from 17,000 to 25,000 within 13, 14 months is unprecedented, of course. But you have to take that into relation that the larger the moves are, the bigger the plays can potentially be, and the more volatile the market can be. I mean, the correctional move is going to be fast and furious, obviously, but we're not there yet. Okay, we're still thinking long. Looking at the Nikkei as well, made all-time highs, 23,970. There's nothing really to say here. I mean, we're flirting with just uncharted territory. We're not sure where it's going to go up to, but just be cautious on the downside. But again, the move is up. Okay, the play is up. DAX trading at 13,384, not breaking higher. Okay, this is what I want to reiterate, that it's not breaking higher out of the the cross range of the major indices. The DAX is not breaking higher, so it's a little bit concerning, but let's just take a look at it. Maybe it'll play catch up at a certain point. Maybe everything is factored in. Some of the southern states are being affected negatively, so have to take that into consideration. This is Fred Razak. I want to wish you guys a great trading day. Thank you.